Hello traders, welcome to the Friday forecast for the ending of the week. So I was in one trade on the New Zealand and the Japanese yen. It was a loss, but let's see what EU is doing first. So what I was seeing in the prior price action is I was seeing a nice descending into a liquidity area. So we do know when a range forms, as we can see here is a range. And then we have a clear liquidity area above and below the range. Of course, the traders that are buying keep their stops here. The traders that are selling keep their stops somewhere around here. And that is the methodology where the market makers actually tap into the liquidity area. They create this descending channel into the lower liquidity area, as we can mark out here. And then price usually starts trending in the opposite direction. So that was what I was noticing, and I did like this push up, but there was one warning sign for me. My entry would have been on this level. So this would have been my entry, and to be honest, to take a 30 or 26 pip retrace was just too much for me. So I did not want to put an order on because it was kind of too far from my entry area. If it was around 10, 14, maybe 20 pips, I would have taken it, but because it was so far, I did not put an order in, and it's good that I did not put an order in because I would have been stopped out right here. So with a 12 pip stop loss, let's see. Yeah, I definitely would have gotten stopped out, but again, it was a good setup. Look what happened after. Price definitely started trending to the upside. As we can see, our methodology did work out, but just the trade did not fit my plan 100%, and there was this aggressive retrace. So now I'm expecting this to continue trending to the upside, as I just mentioned. So for the next week, I will be looking for... I won't really look for a flag here, so that is not something I would want to take on a Monday open. But what I would take is, of course, a break and retest trade. Just a reminder, I'm trading after the London Open on a Monday, so after 8 a.m. I am starting to trade. A kind of a break and retest would definitely fit my plan. I'm definitely interested in buying on a break and retest. If price continues ranging here, as we know what can happen on a Monday or Tuesday, those are the mostly predominantly range bound days, so we can get a range. We can also get a V reversal, in which case I will look for a range, and then I will look for a push to a downside and then to sell. That's kind of it for EU. So had no order, had no trades, but there was a nice setup that just did not fit my plan 100%, so I decided to stay out. Euro and the Japanese yen. So for this one, I am seeing an ascending structure here, but the overall price action, it's kind of more range bound than ascending. I mean, it is correctively ascending, I would say. Not really a good sign because it's breaking the highs, retracing, then it broke the low, retrace, then again started breaking the highs, retracing, and now again it broke the low, retraced, broke the low, retraced. To be honest, I would classify this price action as a clear range bound price action. So because it's in a range, I'm not looking for a trade. What I'm looking for is a large impulse up and then a flag, or a large impulse down and then a flag, or of course a break and retest, whichever entry pattern we do get. Prior price action, I wasn't looking for anything. Nothing really fit my plan. So right here, I'm being also a lot more patient since I'm seeing breaks of the highs and retracing, breaks of the lows, and also retracing. Aussie US dollar, same thing as EU. So what I can identify right here is, of course, first we have a range, liquidity area below and above, of course, but in this case, what happened below is what matters. Descended into the liquidity area, and my entry would have been on an inside bar right here on this inside bar candle. So a candle that has not broken the prior candle high or the prior candle low, this small one right here above it. But to be honest, I did not have an order on because to reach my area, price would need to retrace around, let's see, 55 pips. So 55 pips definitely shows me a momentum shift for the Aussie US dollar. It's definitely too much, doesn't fit my plan anymore. So I decided to stay out of this one. I did not have an order on. It was just too far from my pending order entry. And as you can see, the methodology did work out. Same as on the Euro US dollar. Liquidity zone descended into the liquidity zone. Momentum to the upside, pullback, and then we continued. On Monday, I'm not really looking for a flag, but I would take a break and a retest. Something like this definitely would take it. It's definitely very high probability to buy in this sort of a scenario. So, or maybe we get more of a push up and then a flag, or a break and retest further up. What I do expect is a larger range, since Monday and Tuesday are predominantly range bound days. Or we can get sort of a V reversal and then a flag, and then we look to sell right here. That is a really high probability formation, but only if it happens as a V, so only if we get a drop to a downside, something like this. That's about it for AU. Aussie Japanese yen, I did have an order on right here, but I did remove it. So let me explain. Prior price action, I was seeing an established trend, which is a really good sign price will continue moving up. We can see push up, pull back, push up, pull back, push up, and then we pull back, and then we continue. That was the first confluence. Second confluence is, of course, the free candle setup. So 3 blue candles, only a 1 candle pullback, and definitely no momentum shift in the pullback. Another good thing was it was Wednesday. Wednesdays, Thursdays, Fridays, definitely good days to look for trades. Usually those are the trending days, but there was this really large wick. So when the hour closed, I did have a pending order on right here, like this, on the inside bar. But a couple of minutes later, I went through my plan and things just did not click. The wick was too big for me, so I did not take this trade, but I took the same sort of a trade on NJ, which we will go on a bit later. But for this one, the wick was just too big for me, so I did not want to risk that 1% on this particular trade. Anyone who was in this, it was a really good trade, and maybe in the future, so I will backtest this sort of a setup from an established trend and this free candle setup, see how it plays out in my backtesting. So in the future, I will possibly take this sort of thing, even with a large wick like this. After that, I saw no potential. So right here, I was not looking to sell. The move down was not strong enough, so I just was more patient. Then, so we broke the low, retraced, broke the high, retraced, broke the low. Right here, there was a flag setup, I believe. Didn't take this one either. Right here, we would have entered on the close of the candle. I didn't take it. Momentum down was definitely not convincing enough. And this move down, not really much strength. I mean, price is more stuck in a sideways range than it is ascending on the top. So this move, I just wanted to see a breakout to a downside and then a flag. That's why I did not take this. And there was a bit of a momentum shift in this blue candle. So this blue candle is kind of big as the impulse candles, so kind of a warning sign. When you combine everything, not a good trade, and it was a loss. Good thing I stayed out again. I'm expecting a range here on Monday and Tuesday, definitely expecting a range. I'm seeing this sort of a momentum shift. So let's see if we get maybe a large impulse up and then a flag or a break and retest. Or we get a large impulse down and then a flag, break and retest to the downside. So I just want price to move away from this box. This is a range bound area. I need to see it push up or push down. Give me a nice confirmation and a nice impulse. Pound US dollar. So nothing really here. I mean, there was a flag here, but didn't fit my plan. This would have been the flag entry, so you would have entered on this candle right here. 15 pip stop loss. For me, I saw a clear momentum shift right in these 3 blue candles, so definitely not good for me. When I see this sort of a momentum shift, price usually continues moving up, and I did not enter this trade. What happened then? Price broke the low, reversed, pulled back, continued, and is now trending to the upside. So I'm seeing an uptrend, push, pullback, and another push. What I'm looking for on Monday and Tuesday, not really a flag, since I'm expecting a range on a Monday or Tuesday, but a break and retest I would take. If we get a break and retest, I would be interested. If we get a V reversal and a range, I'm expecting the price to continue trending to the downside. So kind of same as EU and AU, they are moving the same. NJ, now I did have a trade here, right at this level, same as the Aussie JPY. Let me go through it again. So for this one, two major confluences, actually three major confluences. First, established trend, push up, pull back, continuation, pull back, continuation. Established trend is a really good confluence. Second one, free blue candle setup. Blue candle, pullback candle is blue, and another blue candle. Definitely seeing momentum. I am seeing no momentum shift down. I'm seeing that the momentum wants to continue to the upside. Warning sign, yeah, there's a wick. Not as big as on the Aussie and the JPY. This is looking a bit better. So in my checklist, before taking a trade or after taking a trade, I go through my checklist. Basically, Aussie JPY was 8 out of 10, which means I don't take it. And this one was 9 out of 10. The wick was not that big and it was not a big concern. So 9 out of 10 or 10 out of 10 trades I'm taking all day. And I'm really happy that I have taken this one. It did end up being a loss. So took a full 1% loss, but again, a high probability setup, and I would take it again. No brainer, would take it every single time. Then what happened? Well, we broke the low right here, retraced, broke the low again, retraced, broke the high, retraced, and we are now definitely ranging in this area. One thing I'm seeing though is we are kind of breaking the highs and leaving wicks. That's good, but overall price is looking more range bound than it's looking ascending. To be honest, what I would like to see is for this to continue. I would like to see it continue, break the highs and leave wicks like this. And then I would definitely look for a reversal trade. So a flag or a break and retest. Or large push up, flag or a break and retest. Or of course a large push down, flag or a break and a retest. So not really showing me that good price action, but there is potential. Stops are being taken out here. Stops are being taken out here again. We will see what will happen in the next week. So my advice, Monday and Tuesday, be a lot more patient. Usually most trades don't work out. US dollar pairs trending up. So let's see if we can get on continuations, but of course follow your plan and don't let FOMO get the best of you. That's it. See you guys in the next week.